Okay. Good morning, everybody, and thanks for joining us for a Tax Practitioners Board webinar, Complying with the Code Determination. My name is Trevor Hickman, and I'm joining you from a cold and foggy Canberra, which is, of course, Ngunnawal and Ngambri country. In order to kick things off, I'd like to say a quick acknowledgement of country. On the screen, I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I'd like to pay my respect to them, their cultures and elders, past and present. To begin, I've got a few housekeeping messages. Firstly, to obtain a copy of today's slides, you can visit our webinar resources hub at tpb.gov.au/webinar-hub. We'll also email you a copy over of the slides after the webinar. Today's webinar counts towards your continuing professional education or CPE, and you can claim 1 hour for attending today. In relation to claiming your CPE, we will issue an attendance certificate to those staying on for the duration of the session. So on to the next slide, what we'll cover today. Today, we'll look at the new Code of Professional Conduct Obligations as a result of the Tax Agent Services Code of Professional Conduct Determination 2024, or Determination for short. We'll discuss the new code obligations, transitional arrangements, what these changes mean, and practical examples of the application of the new obligations. We'll also dedicate some time at the end to answering your questions. To help, we've got Tariq and Fiona from our policy and legislation team. They will be responding to your questions as we go, so please submit them using the Q&A. To find the Q&A, if you haven't attended one of our webinars before, simply hover your mouse over the screen and a range of icons will appear on the bottom of your screen. You can also use a chat function to speak with other participants. We don't, however, monitor the chat closely throughout the presentation, so if you need a response from us, please be sure to use the Q&A. To disable any of these functions, simply hover over the relevant icon and unselect Show Preview. All that remains is for me to introduce our speaker for today, and we're in very safe hands, TPB Chair Peter de Cure. Welcome, Peter, over to you.
Thanks, Trevor, and good morning, everybody, and thank you for joining us today. To get started, I'd like to give a little bit of background on the obligations and the changes and the purpose and the aims of the new changes. I know for many who are attending, this is old ground, but we'll walk through them anyway. So for those who haven't spent as much time on the topic, so in March 2019, the then government announced an independent review into the effectiveness of the TPB and the TASA. This was a scheduled post-implementation review when the Act was first announced from 2009. The review recommended some legislative changes. In particular, one that was accepted by government was to include a legislative instrument power to be made available to the minister. This meant that the minister was the assistant treasurer in our case, able to make changes to the code of conduct that were relevant to the code of conduct, but were brought about through a need to respond to changes in our marketplace or circumstances. So in January 2024, that power commenced. On the 9th of October 2024, the minister made his first determination in relation to the code of conduct, and following a consultation process, that determination was finalised. In the course of the discussion, there have been 8 new code obligations introduced. All of these code obligations are consistent with the existing principles in the code, and generally they're very consistent with the requirements of the International Accounting and Ethical Standards Board and the general requirements of the larger professional bodies. The minister in the consultation process decided it was appropriate to have a transitional period for the introduction of these changes, and also through our own work, we've been making it clear that we'll take a pragmatic and proportionate approach to the implementation of these changes. So as most of you will be aware, for the smaller firms with 100 or less employees, the changes commence from 1 July 2025, i.e. in a couple of weeks from now. for the larger firms with 100 or more employees, or with more than 100 employees, sorry, the changes are already in place. So to assist you in becoming familiar with these changes and to try and help you with your own implementation, we've been working through a series of webinars like this one. We've been publishing guidance on our own website. We've been frequently engaging in other speaking opportunities around the professional environment. And we've also put a lot of information on our website, including frequently asked questions. So what I'd like to do now is go through the 8 new requirements. Firstly, we've got upholding and promoting the ethical standards of the tax profession. Secondly, we've got new requirements in relation to, 1, not making false or misleading statements, and 2, what needs to be done if they are made. We've got new provisions in relation to conflicts of interest in dealings with government, and this really just extends your normal conflict of interest management processes to include when you're dealing with the government. The majority of this will apply to those larger firms who are involved in consultation with government on a regular basis. There's also new specific provisions in relation to maintaining confidentiality in dealings with government, specific obligations in relation to keeping of proper client records that I'll talk about in a little bit more detail, more specific obligations in relation to ensuring that tax agent services that are provided on your behalf are provided competently, an obligation for everybody to have an appropriate quality management system in relation to their own practice, and we'll talk about the differences between small and large firms later, and also specific requirements on what you need to do to keep your client base and prospective clients informed about relevant matters in relation to whether they should engage you. So let's jump onto the next slide, and we'll talk about upholding and promoting ethical standards in the tax profession. So under this obligation, what we expect you to be doing is to independently and in your work with other tax practitioners to uphold and promote the code of conduct. That means don't engage in the sort of things that you know or ought reasonably to know might undermine public trust and confidence in the integrity of the profession. This includes conduct that discredits the tax profession or brings the profession at large into disrepute, or could potentially undermine trust and confidence in the integrity of the system overall. What we're really talking about here doesn't prevent you from engaging in genuine and respectful debate about the tax system. It doesn't restrict you from involvement in any genuine political activity. But what it does mean is that you should be civilised in your commentary about the system. But in particular, it means don't be engaged in things like promoting tax schemes or any deliberate evasion or avoidance of tax obligations. The profession, tax agents and BAS agents, have a significant role in ensuring that their clients and the taxpayers at large can have trust and faith in the overall tax system. And what we're looking here is to make sure that the way you behave promotes that trust and faith in the system. So let's go on and talk about false and misleading statements. As most of you who've been involved in the tax profession for a while will know, false and misleading statements, or not making these statements, has been a pillar of how our tax system works. These new requirements really just make it a little bit more specific about what has to happen in relation to your own involvement in potential statements that are false or misleading. So the first requirement is that you must not, in your role as a tax practitioner, prepare or make a statement to the TPB or the Commissioner that you know or ought reasonably to know is likely to be false or misleading. You must not permit or direct someone else to make or prepare a statement that they know or ought reasonably to know is false or misleading in a material particular, or omits any matter or thing without which the statement is misleading in a material respect. Again, this highlights the importance of your role as a tax or BAS agent in the tax system, particularly when you're making representations to the TPB or the Commissioner for your own or your client's affairs. The nature of this obligation is entirely consistent with honesty and integrity, which is code item 1 of the existing code. It's concerned with the particulars that are material in nature. This means that false or misleading particulars that are trivial would not necessarily constitute a breach of the code. The second aspect of the obligation requires you to take further action where you have made a statement or permitted or directed a statement to be made by somebody else that you know or reasonably know is false or misleading. So what you're required to do here is, at a time after the statement was made, when you have reasonable grounds to believe that that statement was either false or misleading in a material particular at the time the statement was made, or omits a thing at the time that it was made that made the statement false or misleading in a material particular, and you had reasonable grounds to believe the false or misleading statement resulted either from a failure to take reasonable care in connection with the preparation of making the statement, recklessness as opposed as to the operation of the tax law, or international disregard of the tax law. If all of these elements are met within a reasonable period of time after you come to believe that the statement given is false or misleading, you must take action which could include having the statement corrected or advising your client to correct the statement and notifying the TPB or the ATO about the matter. The requirement to take further action encourages registered practitioners to be accountable and to make corrections to ensure that the TPB and the Commissioner have access to the most accurate and appropriate information in relation to tax affairs. Correcting information also displays the goodwill of the tax practitioner and may be factored into any potential sanctions pursued by the TPB for that breach of the code. Let's jump forward into the next slide and we'll talk about correcting false and misleading statements. So the determination requires a registered practitioner, as soon as possible after they become aware that the statement has been made that is false or misleading or incorrect in a material particular, to take all reasonable steps to correct the statement where the false or misleading statement was made by you, the registered tax practitioner, or you permitted or directed someone else to make that statement, to advise your client that the statement should be corrected and the possible consequences for not doing so if you made or prepared the statement or permitted or directed somebody else to make or prepare the statement for a client. At this stage, your client may well instruct you to take steps to correct the statement on their behalf. We would expect that you and your clients to agree upon the fees and other terms applicable for you in doing so. So let's have a little look at a case study where a registered tax practitioner corrects a false statement previously made to the TPB that was made without reasonable care. So in our case study, Ella is a registered BAS agent, advised the TPB that she was covered by professional indemnity insurance taken out by her company, ABC Proprietary Limited. She provides the TPB with a policy number and an expiry date that she believed was the PI insurance policy that she was covered by. Ella obtained the policy number and expiry date from an old email forwarded to her by a colleague and did not review any of the documentation for the latest period or for the latest policy held by ABC Proprietary Limited. Upon undertaking an annual review of ABC's insurance policies, it became apparent to Ella that she was not actually covered by this policy held by the company. As such, statements she had made regarding meeting the TPB's insurance requirements were false. ABC Limited promptly updated its PI insurance policy to ensure that the provision of tax agent services by all employees and contractors on their behalf was covered. ABC and Ella subsequently advised the TPB that the false and misleading statement had been provided and that a new correct PI insurance details were also provided. Let's show a thumbs up if you think Ella and ABC Limited, Proprietary Limited, have met their obligations under the determination, and a surprised emoji if you think they haven't. I can see a sea of thumbs up coming across the screen, and I agree. The conduct by ABC Proprietary Limited and Ella in the first instance did give rise to breaches of subsection 15(1) of the determination in failing to make PI insurance requirements. False and misleading statements were made by Ella and ABC Proprietary Limited due to failure to take reasonable care in checking the coverage provided by the PI insurance policy. However, when Ella and ABC became aware that they hadn't met their obligations under Section 15.2 of the determination, they subsequently took all reasonable steps, both to get the right policy in place and to advise the TPB in a timely fashion. So in this instance, we're quite happy that Ella and ABC Proprietary Limited have corrected the false and misleading statement, and we would take no further action other than perhaps a short written caution to record the matter in everybody's files. So let's jump forward to the next slide, and we'll start talking about keeping proper client records. So it's clear under the new provisions that you are obligated to keep records that correctly record all of the tax services that you provide or that are provided on your behalf to your clients, including former clients. Your record keeping obligation is 5 years after the service was provided, so that's very consistent with all the other tax record keeping requirements. And the records that we're looking for you to keep must be in the English language or easily converted into English. As I've said, retained for 5 years, and they're about substantiating the quality and accuracy of the tax services that you've provided. So the sort of things that we're looking for are engagement letters, if you've got them, copies of your tax files with your tax reconciliations, perhaps any copies of tax office rulings or cases that you've used to determine a particular position, so that we know how the tax services that you've delivered have been worked up and demonstrated to be the right decisions. We're definitely not looking for you to keep full copies of the client's general ledger or their accounting records. What we're looking to be able to do is substantiate that you have provided tax services competently and appropriately to your clients. And I will say that if you're using copies of things from the ATO website, I strongly suggest that you take a screenshot of the website information that you're going to rely on, because we all know that from time to time the ATO will change the things on their website. So you need to be able to demonstrate what you're relying on and when you were relying on it. So proper record keeping, we would suggest, is just a normal part of any business. It explains and evidences your actions in the decisions that you've made. And it could be particularly important in the case that a dispute arises between you and your client. And it's one of the first things that your PI insurer would look for you to have is appropriate records of your services and service delivery, and also potentially very useful in any dispute with the ATO about your client's tax or your own tax affairs. So let's jump forward into the next slide, please, and we'll talk about tax agent services provided on your behalf being provided competently. As I'm sure you're all aware, you are obligated to have appropriate supervision and control over the staff that work in your own practice. This requirement is to make it clear and understood that you, as the registered agent, tax agent or BAS agent, are responsible for the tax services that are provided to your clients on your behalf. So that can include work that you outsource to other practitioners or that you outsource to offshore parties. So the concepts here are really consistent with the existing obligations of the code to make sure that you've got adequate processes in place to ensure that any outsourced work is done competently. Now, if you're outsourcing work to another registered agent, they will have the same obligations as you've got in relation to their own practice. If you're outsourcing to bookkeepers or offshoring to firms that are not registered agents, you're still responsible for the quality and appropriateness of the taxation services that result from that work. So you'll need to make sure that you've got appropriate quality controls in place with the people you're working with. So let's jump forward into the quality management systems in section 40, please. As you're aware, the code determination requires that all tax practitioners should establish a system of quality management in relation to the provision of tax agent services, either in their own practice or on their behalf, The system is designed to provide the practitioner with reasonable confidence that they're complying with their obligations under the code. I genuinely want to stress that we are acutely aware of the differences in sophistication between the big end of town practitioners and the smaller end of town practitioners. So our expectations of the major firms, the big four, the second tier, we have high expectations that they will run sophisticated ISO type quality management systems for their large practices. For the smaller practitioner, we want to be able to see that you've got appropriate internal controls and policies and procedures to run a practice that's in compliance with your obligations under the code. So this can be a much simpler and more focused system than would be appropriate for a large firm. The extent of internal controls required is going to differ significantly, and it should be based on the size of the individual practice. It should include consideration of the level of day-to-day engagement by the registered tax practitioner with the tax agent services that are being provided, and it should also give due consideration to the complexity of the services that are being provided, as well as the complexity of your client's affairs. Complying with this code item will give consumers confidence that their practitioners have appropriate policies and systems and processes to provide tax agent services to a high professional standard. One of the clear things for a sole practitioner, this could be a really simple system of checklists to make sure that their work is done in accordance with the code of conduct. It will be as simple as making sure that you are taking appropriate action in relation to cybersecurity and management of the updating of any software that you're using, just to make sure you've got those systems in place and you can demonstrate how you're implementing them. Let's move forward on to section 55 and the requirements to keep your clients informed. Under this obligation, the determination requires you to take some pretty specific action to advise all of your clients and prospective clients in a manner prescribed and the form of the TPBs of the following facts: that the TPB has a register of tax and BAS agents and how clients can access and search that register. It requires you to advise your clients and prospective clients of how they can make a complaint about a service provided by you, including the complaints process of the TPB. You are obliged to notify your clients and prospective clients of your rights and responsibilities and obligations, including your obligations under the TASA and the Code of Conduct, and what obligations that the clients have to you as their tax practitioner. You need to give them information about prescribed events and matters, and those prescribed events are prescribed in the regulations to the TASA. At this particular time, there are no prescribed events, but if we do prescribe some, we will let you know. You're also obliged to tell any client or prospective client if your registration is subject to any specific conditions, like an R&D condition or an individuals only condition, something like that. You're also clearly obliged to let your clients know of any of the facts, if your registration has been suspended or terminated by the board. This obligation ensures there's transparency of the tax practitioner profession, which is critical to ensuring the integrity of the system as a whole. The obligation serves a strong consumer protection imperative, and it's also important in making sure that there's a level playing field between practitioners. We want to support the practitioners who are doing the right thing and make it harder for the ones who are skirting around the law. Now, in terms of how you go about informing your clients, you can choose your own preferred way to advise clients. One way that you can satisfy it is by publishing information on your publicly accessible website that you use to promote your services or tax agent or BAS agent services. If you don't have a website, you can do things like including the information in an engagement letter or re-engagement letter with clients. You can do it on Facebook. You can do it on LinkedIn. You can provide your clients upon engagement or re-engagement with a copy of a fact sheet or a general information sheet for clients. I will note we have significant information and guidance on these matters on our website. So please feel free to look there and to use the fact sheet that we've provided. I see on a pretty daily basis through our media feed, a number of firms are already publishing this stuff on their website in preparation for 1 July. So I encourage you to do that. If you're running a really small practice and you don't have a website, feel free to send it out in an email to your clients, but make sure that anybody you're talking to about potentially becoming a client has the information that they need to make an educated decision about whether they want to employ you as their agent. Let's have a quick look at case study number 2 now, please. So this example looks at a situation where a prospective client engages a company tax agent who fails to advise of matters relating to their TPB registration. CTX Proprietary Limited is a registered agent with 200 employees. It's engaged by a prospective client and provides a letter of engagement to the client which sets out a description of the work to be performed. However, the company omits information about the TPB maintaining a register of tax and BAS agents and how the client can search and access that register. It doesn't tell the prospective client how the client can make a complaint about a tax agent service that the company provides, and it doesn't provide any information about the TPB's complaints process. Additionally, CTX didn't take any steps to include this information on its publicly available website. Let's have a thumbs up for those of you who think they have complied with their obligation, or a surprised emoji for those of you who think they haven't. Yeah, I'm flooded with a sea of surprise here. So well done, everybody. It's clear in this situation that CTX hasn't met its obligations to comply with Section 45(1). I will note that CTX is a large firm with 200 employees, so it's clear that these obligations are already in place for CTX because they started on 1 January this year for the large firms. If CTX was a small firm, they would have until 1 July this year to get their house in order. Let's talk quickly about managing conflicts of interest in activities undertaken for government. I will stress that this really is a clear extension of the code to make it certain that your confidentiality and conflict of interest obligations extend to your dealing with government very much in the same way as they do with your existing clients. So these obligations make it clear that any activity that you are engaged with, and let's jump to the next slide, please. That's excellent. So any activity undertaken for an Australian government agency in your professional capacity, you are obligated to manage your own personal conflicts of interest in relation to those activities for government. So first, you must take reasonable steps to identify and document any material conflict of interest, real or apparent, in connection with an activity undertaken for the agency. You are obligated to disclose the details of any material conflict, real or apparent, that arise in connection with this activity. And as soon as you become aware and the agency, make the agency aware of that conflict, you are obligated to take reasonable steps to manage and mitigate the conflict where appropriate and where possible to avoid any material conflict of interest, real or apparent, that arises in connection with any activity undertaken for the agency. This obligation is intended to assist in minimising potential adverse impacts to government agencies where a practitioner they engage with has a conflict of interest in relation to that activity. So like Code Item 5, it doesn't prohibit you from having conflicts of interest. Rather, it creates a clear obligation to appropriately manage, mitigate, and disclose those conflicts of interest so that they can be well managed. Importantly, this obligation only applies if you are engaged by an Australian government agency to undertake work or an activity for that agency. If you're not undertaking an activity for an Australian government agency, then this obligation won't apply to you. Just to sort of flesh out the conflict of interest piece, a conflict of interest can be where you have a personal interest or a duty to another person which conflicts with the duty owed to the government agency. And a typical example of that is where you're doing some work for a government agency, but you've also got either your own practice or your clients' businesses that may have a direct interest in those matters. It may be direct or indirect. It may be real or apparent, i.e. perceived conflict. The test of whether a conflict of interest is material will depend on the facts and circumstances. A material conflict of interest can arise in circumstances that include being engaged by a government agency to consult on proposed government law reform that impacts your clients or your own business, where you may benefit or gain financially from your engagement with the government agency directly or indirectly. This could include a benefit to yourself personally or to your employer or a client or an associate. You must not misuse confidential information obtained in your dealings with government agencies for personal or commercial benefit. You must not interfere with government decision-making processes in circumstances where the conduct may result in a potential or perceived gain to yourself. The first element of the obligation requires you to take reasonable steps to identify and document any material conflicts of interest, and this requires you to turn your mind to whether a conflict does in fact exist. You should keep adequate records of your consideration of these matters, and you should keep adequate records of what action, if any, you've taken. Importantly, the information should include details of the conflict, including the details of how material the matter is to you or potentially your business or your clients. The second obligation requires you to make sure you do not disclose any details of any material information that arises in connection with an activity undertaken for government. You are clearly obligated to disclose your conflict to government, but you must not, having disclosed it, make use of any information that you gain through that process. This, again, extends to any material conflict of interest that you are aware of or should reasonably be aware of, whether the same or different activity or in relation to any activity taken for another government agency. This may include any conflict of interest of any employee, associate, or contractor of yourself or your relevant entity in undertaking these activities for agencies. As we've said, your obligation is to disclose immediately. Just looking in detail at the obligations in relation to non-disclosure of confidential information. When you're working for government, you will have the information that you're provided will generally be provided to you on a confidential basis. And if it's not confidential, it should be made clear to you by the government agency that the information is not confidential and is able to be disclosed. So unless you've been specifically informed that information isn't confidential and is able to be disclosed, you should treat it as confidential. And your obligation there first, don't disclose any information received directly or indirectly from the government agency that's in connection to the activities you're undertaking for them. And the only exception there is if you have a legal duty to do so, or to the extent that the following two criteria apply. If it's reasonable to conclude that the information received from the government agency was authorised by that agency for further disclosure, and any further disclosure was done consistently with the agency's authorisation. So if that's the case, government will have made it clear to you that they want you to disclose the information and consult about it in your peer groups. Secondly, you're obligated not to use any information directly or indirectly received from government in connection with any undertakings for that government agency. You're not to use it in your professional capacity for your personal advantage or for the advantage of an associate or an employer or a client, whilst that information is confidential information. This obligation is intended to protect unauthorised disclosure and improper use by registered tax practitioners of information that they provide in relation to activities undertaken for government before that information is intended to be used in the public sphere. I also want to reiterate that this obligation only applies to you if you are engaged by a government agency to undertake an activity for that agency. If you're not working for or undertaking an activity for an Australian government agency, then these obligations won't apply to you. Thanks, Trevor. I think we can go back to you now and deal with some audience questions.
Thank you very much, Peter. Yeah, we've got quite a few questions in the Q&A box. I'll start off with this one. Does a new obligation to ensure tax agent services being provided on your behalf are provided competently require your staff to have formal training?
Well, Trevor, not necessarily. We don't prescribe any particular method or obligation in relation to how you satisfy these criteria, but there's a range of things that you should consider. And clearly, if you think your staff haven't got all the skills they need for a particular part of their tax agent service, I think training is a great way to proceed. But also, you should consider what are their relevant knowledge and skills, what are their relevant qualifications, how do they maintain those skills? Are they meeting their own CPE requirements, or should your firm or you be providing CPE to your clients? Making sure that there's appropriate on-the-job training that is relevant to the tasks and the services that you're expecting your staff to be engaged in. So clearly, we don't expect all of your team to be competent in every aspect of tax, but we do expect them to be competent in the tasks which are assigned to them. Okay, so they need to have the relevant skills, qualifications, and knowledge to do the work that you want them to do.
Great stuff. Thanks, Peter. I'll throw this next one to you, Tariq. It's a question that's come in, I think, from an anonymous source. We'll be sending out updated engagement letters to all clients that includes the new information, but do these need to be sent and signed before 1 July or before work performed?
Thanks, Trevor. The requirement under the code determination in relation to keeping your clients informed, it's to do with all clients or prospective clients prior to that engagement. So prior to doing that work, you'd have to ensure that that engagement is signed and the information that Peter spoke about that needs to be provided to your client is provided.
Okay, thank you. Another one for you, Peter. Are tax practitioners required to undertake police checks on current or potential staff?
No, there's no specific requirement to conduct police checks. However, you should consider our guidance material in respect of disqualified entities in particular. So you need to take enough action to determine whether a prospective employee is a disqualified entity. And our guidance on that matter sets out some of the minimum standards that we think need to be achieved before you employ or engage the services of another entity to undertake tax services on your behalf.
And on to the next one. Does a supervising tax practitioner have to review every return that is lodged by their firm? Perhaps over to you, Peter.
Yeah, there's not a specific obligation to undertake an individual review of every return. However, what we want to make sure you consider is what systems and checks and balances do you have in place in relation to making sure that those returns are prepared and reviewed by appropriately skilled people. So again, we've got guidance in relation to this subject matter on our website, but you should really be working through the level of complexity of the returns that you've assigned to people and their supervisory staff, making sure that they've got the adequate qualifications, knowledge, and skills to do the work that is being managed by them, and that you've got the right systems in place, things like checklists and guidance and file structures to make sure that the work is being done to a professional standard. So we understand that every practitioner won't always be able to look at every return in detail, but just make sure that there are appropriate controls and risk management procedures.
Okay. Here's another one, perhaps another one for you, Peter. If I offshore work to an overseas bookkeeper who is doing work on my behalf, what responsibilities do I have to supervise their work to ensure it's competent?
Yeah, so it's one of the things I really want to make it clear. If you're offshoring work, that's the same as having it done by your own team. So you're responsible for the tax services that are provided to your clients. So what we want to make sure is that there is adequate training for any offshore staff, that in that organisation, do they have registered tax agents that are supervising the work? Do they have the appropriate skills and internal training in their own organisation to be able to meet the Australian requirements? Is there appropriate and adequate quality review and assurance systems? If there are tax practitioners involved in that overseas work, that's going to help registered practitioners. Do you have any sort of an exchange program with some of those overseas staff rotating through your Australian presence or your Australian office so that you can train and supervise through those ways? What are the arrangements that are in place in that offshore business to make sure that they're up to speed and that they have up-to-date knowledge and relevant technical, legal, and business skills? So really, the matter here is to make sure that firstly, you understand that you're, as the registered agent, responsible for this work, and secondly, that those people you're outsourcing work to have appropriate knowledge, skills, and controls to deliver that work to the standard required.
Thanks, Peter. Very wise words. Over to you, Tariq, next. Does the TPB have templates for QMS, especially for small practices?
Yeah, thanks, Trevor. Good question. That's been asked a few times, I've seen in the chat box. So the TPB itself doesn't develop templates for use by practitioners, only because each practitioner will be very different. What we do though, is provide in our guidance some of the factors you might want to look at depending on the size of your business, including if you're a sole practitioner or a small business. However, if you're looking for some templates and some further information on practically what you could do, you might be able to reach out to the various professional associations. Sometimes they're able to provide that information.
Okay, thanks, Tariq. One for you, Peter. Does my system of quality management require an independent audit to achieve compliance?
There isn't an obligation to have an independent audit for the TPB's purposes. Now, I know in some of the more sophisticated systems that are compliant with broader industry standards, there can be an audit requirement, but that's not necessary for the TPB's purposes. What we want to see is that you have a system in place that's proportionate and appropriate for the type of practice that you're running. So for a small practitioner, as I've emphasised, it's about demonstrating through your system how you are going to go about meeting the obligations of the Code of Conduct. For a larger practice, all of those things are more complex, and they'll probably lean to a more formal system that may require an external audit. I know a lot of formal accreditations in other industries, like the health industry, require an audit before you get the formal accreditation. That's not the case for the TPB, but as Tariq has said, the professional associations in general are a rich source of information on how to implement QMSs and relevant and proportionate QMSs.
All right. Thanks, Peter. Just looking through the questions and answers now. I've got one that's come up quite a lot. Maybe, Tariq, can you provide some additional information on the requirement to issue engagement letters and how often they should be issued?
Yeah, thanks, Trevor. So a few questions have popped up there on engagement letters. First of all, we should say at the outset, it's not a requirement under our legislation that you have an engagement letter. However, it is something that we do strongly recommend that all tax practitioners use. We've published on our website some guidance on the effective use of engagement letters and what you could possibly and usefully include in them. They are a very valuable source of putting in terms of your contract with your client, what the expectations of you are as a registered tax practitioner and what the expectations of your client will be. They're also really useful in meeting part of your obligations under the Code of Professional Conduct and the determination, particularly in relation to keeping your clients informed and whatnot. So in terms of further guidance on, if you're looking for a template of an engagement letter or specific details of what it might include, again, the professional associations, most of them do have those templates. They're very useful, so you might want to reach out to one of those to get further information. But you can start with at least the information on our website.
And Trevor, can I just jump in and stress, whilst engagement letters aren't compulsory for the TPB's purposes, they're one of the best risk management things that you can do in your own practice. They're one of the things that I'm sure would form a part of a sensible quality management system. And it's probably the first place that your insurance, PI insurance company is going to look if you end up in a set of circumstances where you've got a claim against you. So having the right engagement letter is a great piece of risk management and potentially defence against PI claims for all practitioners. So as Tarika said, we strongly encourage their use. And it's also a great way to fulfil your other obligations in terms of information, the appropriate information your clients and prospective clients should have.
Thanks, Peter, and thanks, Tariq. This is one I know that came up quite a lot during consultation. Do I need to inform current and potential clients that have a physical or mental health issue?
That's a definite no, Trevor. You're not required to disclose any of your personal health information to clients or prospective clients or to the TPB.
Thank you very much for confirming
I'll
that.
just add to that, Trevor. Peter's absolutely right. That's not one of the things. The keeping your clients informed obligation is limited to very certain matters and events, and it's only those matters and events that need to be disclosed to your client. So have a look at that. That's on those slides that Peter's gone through, and definitely the physical and mental health is not one of those factors.
That's wonderful. Thanks for the clarification. So it's a kind of a good segue on to another one. Can you elaborate on the requirements of keeping clients informed?
Well, happy to. And I think what we're doing here is about making sure that clients are able to make an informed decision about whether they should engage you as their tax agent. And what we're trying to do is to make sure that there is, firstly, appropriate protection for the consumer. So that says keep them informed of the fact that there is a register of tax agents and BAS agents and how they can search that. So that's the first step. They can go and find your name or your practice's name, company name, on the register and be assured that you are a registered tax agent. Also, you can use the registered tax agent symbol that's got your registered number on it. You need to advise your clients how to go about making a complaint about a tax agent service provided by you, and how to do that through our complaints process so that in the event of any dispute, they're educated and can seek help from the TPB. That may well work out in your favour when potentially explain to them that you've done everything right. But you have that obligation. You need to give them the general information about the tax practitioner's rights, responsibilities and obligations under the tax laws. So that protects you as an agent against clients who might potentially want you to do the wrong thing. So by making this explanation to them of your rights and obligations, you're making it clear that you're putting your registration, your license to practice at risk if you don't do the right thing on their behalf. And you also have the obligation under the code to act in your client's best interest, but you must do that lawfully. Unlawful or inappropriate claims on tax returns are not in your client's best interest. Because they're unlawful. You also need to give them, general information about their obligations to you. So, they have the obligation to you to be truthful and to provide you the information that you need to lodge their tax returns or to give them tax advice. It's critical that they support you by giving you full and free and frank information, and that they don't make false or misleading statements to you, because that's going to lead to trouble for you. Equally speaking, you must advise them if there are any prescribed events that have happened to you within the last 5 years. So that includes things like, has your registration been terminated? Has your registration been suspended? Have you had a formal sanction from the TPB It doesn't include if you've had a caution from the TPB. You must advise them if you've been found guilty of a tax crime or if you've been an understage bankrupt. So you're obligated to advise them of all of those matters that are relevant to them in making a decision about whether you're the right tax practitioner for them. And this is both in the interests of consumer protection and in the interests of a level playing field, because, if for those vast majority of practitioners who comply with the law day in and day out, they also need to be protected from the people who are not prepared to do the right thing. This level of disclosure helps with that protection of your businesses. So I will stress, on our website there is a fact sheet which practitioners can download and provide the fact sheet to their client that will cover off on all their obligations here. It's designed to meet that part of the registered practitioner's requirements of keeping their clients informed. You can use it as an annex to your engagement letter. You can use it as an addendum to any letter that you send to your client to offer them services. So that is a really practical tool for you to use. And there's also the more detailed guidance on our website about these matters.
Fantastic. Thank you, Peter. That's a very comprehensive answer. Do you have anything to add, Tariq? It doesn't matter if you don't, because I think Peter covered a lot of things off there.
Cover that one.
Yeah. So I'll throw this next one to you then, Tariq. Do we need to let clients know if a complaint has been lodged with the TPB, even if there was no investigation or no sanction was imposed?
Yeah, thanks, Trevor. Short answer is no. You don't have to advise around complaints or even investigations that are on foot. As Peter and I have said, it's limited to very specific events. One of those events is the outcome of an investigation where there might be like a suspension or termination. If that eventuates, that's the sort of thing that you'd be advising your clients on. Complaints and investigations on foot is not a matter.
Thank you. That's good. So here's another one that's come in. If we, perhaps I'll check this one to you then, Peter. If we already have engagement letters in place with our clients, do we need to send them updated engagement letters with the new complaint links included, or can we wait until the engagement letters expire and we issue new ones with this information?
So there's a little bit of nuance in this one. So your obligations for this information being given to your clients, as I've said, they're in place for the large firms already, and they start for the small firms with effect from the 1st of July. So if you have already provided this information via your publicly available website or another method, then you're welcome to renew your engagement letters and put this information in engagement letters when you renew them. But if their only source of this information is their engagement letter, then as soon as the code items apply to your business, i.e. now or on the 1st of July, you must provide this information before you do any further work for them. Okay, so they need to have this information before you provide tax services. So if that's through your engagement letter, issue a new engagement letter straight away. If it's already on your publicly available website or you've sent them an email about it or something else, that'll be fine. So the only way you can wait for a new engagement letter when it's due is if the information has already been provided to them.
Right, thank you. Here's another one that's come in, an anonymous attendee. When making a report about a false or misleading behaviour, are we eligible for whistleblower protections? Perhaps Tariq, if you'd like to take that one.
Sure, Trevor. Yes, absolutely, it's possible. In some circumstances, reporting registered tax practitioners may be eligible for tax whistleblower protections. To qualify for that protection, there are certain criteria that do need to be met, including you have to be an eligible whistleblower. There's a bit of detail that goes behind that, but it's all available in a checklist type format on our website. So you can have a look at that to see whether or not you meet those requirements of an eligible whistleblower and whether you'll qualify for that protection.
All right. Well, I think with the time approaching 12:30, we'll finish now the questions. Ashley, if you'd like to click on to the next slide. Okay, I'll just fill in there. So, and if you, we try and get to most questions. If you check after the webinar, give us a little while, but then if you check on the webinar resource hub, we'll try and answer most of the questions asked today. And if you'd like to have other information about what we've talked about, then it will generally keep up to date. Don't forget to visit our website, tpb.gov.au. The address is on the screen there. You can also follow us obviously on LinkedIn, Facebook, and X. We also have a newsletter that goes out each month called TPB e-News, which you can subscribe to. Again, the subscription link is on there, tpb.gov.au/newsroom. You can also subscribe to our YouTube channel to receive notifications when we post new videos. And don't forget, you can still claim CPE for viewing these videos. A big thank you for Peter for sharing your insights today. And of course, also to Tariq and Fiona for assisting with questions. Thanks very much, guys. A quick reminder that we've got the second webinar today, Know Your Obligations, at 2:30. And you can find details about that also on tpb.gov.au. We hope you found this webinar beneficial. As I've said, it can count towards your CPE, and you can claim 1 hour for attending today. And if you can just click to the next slide. Before we finish up, I'll be launching an exit survey. We'd appreciate if you can take the time to complete the exit survey. It only takes a moment, and feedback always helps us to improve our webinars, and particularly lets us know of topics that are of interest to you, and we can schedule those in into any forthcoming timetable. The survey will open in your browser once you leave the webinar. And once again, thank you for joining us today, and we hope to connect with you all again soon. Thanks very much.
Thanks, Trevor. Thanks, everyone.